Good morning, everyone, and welcome. Today, we're diving into the important topic of auditing cash, marketable securities, and complex financial instruments. Our focus will be on ensuring accuracy, maintaining integrity, and building confidence in financial reporting. This is a critical area for any organization, and I'm excited to explore the key concepts and best practices with you. Let's get started. When we audit cash and financial instruments, the first goal is to make sure that the financial statements truly reflect the company's financial position. Cash and marketable securities, along with more complex financial products, are often major parts of a company's resources, which means any errors or fraud involving these can have serious consequences. Auditing these assets thoroughly provides assurance about the company's liquidity and the integrity of its investments, which is crucial for building trust with stakeholders. Because these assets can be quite complex and carry significant risk, the audit process plays a vital role in identifying any misstatements and ensuring compliance with accounting standards. Ultimately, this careful scrutiny helps enhance stakeholder confidence by confirming that the company's financial reporting is both accurate and reliable. When auditing cash, it's crucial to follow a structured process to ensure the company's lifeblood is protected. First, we start with bank confirmations, which involve directly verifying cash balances with the financial institutions to ensure accuracy. Then, we move on to bank reconciliations, where we carefully compare the company's records with bank statements to identify any discrepancies. Next, we examine cash receipts and disbursements closely, tracing the flow of transactions to spot any irregularities. It's also essential to evaluate internal controls to make sure there are safeguards in place that prevent any misappropriation of funds. Finally, we assess the fraud risks associated with cash handling and recording, keeping an eye out for vulnerabilities that could be exploited. Each of these steps plays a key role in securing the integrity of cash management within the company. When verifying the integrity of marketable securities, the first crucial step is to identify and segregate them based on their type and intended purpose. This helps maintain clarity and proper management of each security. Next, it's important to classify these securities according to established accounting standards, such as whether they are held for trading, available for sale, or held to maturity, as each category has different reporting requirements. We also need to confirm our actual holdings with custodians or brokers to ensure that our records align with the external sources. Valuation tests are another key aspect, where we verify market prices and assess any potential impairments to reflect the true value of the securities accurately. Finally, reviewing the financial statement disclosures is essential to maintain transparency and provide stakeholders with a clear understanding of the securities reported. These steps collectively ensure that our investment records are accurate and reliable. When auditing complex financial instruments like derivatives, swaps, and options, it's crucial to use specialized approaches tailored to their unique valuation and accounting challenges. First, we need to thoroughly understand the structure of each instrument and the specific contract terms, as this forms the foundation for effective auditing. Next, testing the valuation models is essential. It's not just about the numbers, but also verifying the assumptions and inputs to ensure they're accurate and reasonable. We also spend time reviewing hedge accounting, paying close attention to documentation and the effectiveness of hedging strategies. To further confirm accuracy, it's important to validate balances and transaction details directly with counterparties. Finally, evaluating the disclosures related to risks and the accounting treatments helps us address the inherent complexity and minimize the risk of material misstatements in the financial reports. Each of these steps plays a key role in navigating the challenges posed by these sophisticated instruments. When auditing cash, marketable securities, and complex financial instruments, it's crucial to have rigorous confirmation and reconciliation processes in place. These steps ensure that the numbers we see truly reflect reality and help identify any discrepancies early on. Next, a deep understanding of asset classification and valuation principles is essential. Without this foundation, it's difficult to accurately assess the financial position or identify potential misstatements. Equally important is the thorough assessment of internal controls and fraud risks. Evaluating these areas carefully helps maintain the integrity of the audit and reduces the chance of overlooking fraudulent activities. We also need to leverage expert judgment and the latest technology, especially when valuing complex instruments. These tools and insights provide a more precise and reliable analysis than relying on standard procedures alone. Finally, transparent disclosure reviews are key. They not only highlight risks and accounting policies clearly, but also enhance the overall quality of the audit, giving stakeholders confidence in the financial information presented.